You guys were not here before.
Why don't you?
Right?
Here?
Okay.
Yeah.
All right. Today,
Maybe.
it takes about 2 hours of lecture, so I'm not going to spend whole lecture. Okay. I am going to talk about only the area where you are
Maybe
going
too
to.
Because the letter is become less small.
Okay.
You have the small same
This is an
PowerPoint
entrepreneurial.
slide. Yeah, but from the print,
finance
I
and
understand.
accounting.
Yeah. I want to the
And,
recording of the explanation of professor.
Okay.
They will see today, they will see
I'm going to talk about the basic accounting equation. Asset should be equal to liability and equity. Okay, and provides underlying framework for recording and summarizing economic events. So,
combine.
okay, what is an asset then? Assets are resources a business owned. For example, if I purchase a BMW is $50,000. This $50,000 Hello? Okay. Yeah. All right. I like a BMW. The BMW, the price of a BMW is $50,000. Okay? So this $50,000 however, I have only $20,000 in my pocket, right? So this $50,000 is equal $20,000. This is an equity, and I borrow money from the bank for $30,000. Okay, so this $50,000. This is a BMW price. Okay, so this 50,000 is an asset. Okay, this asset is 20,000 out of my pocket, and 30,000 I borrowed from the Bank of America. Okay, so asset is 50,000. The BMW is the resource of being I own. This is a resource. Okay? Then this will give you the future benefit. Future benefit. For example, not talking about the BMW, talking about the truck. I purchased a $50,000 worth of truck. This truck will give you, will provide you a future benefit all the time. Right? Right? So, whenever you prepare financial statement, assets supposed to be equal equity and liability. No matter what, this is the Constitution. Okay? Has to be equal. This equal. Equality in equation. Equal. Okay? So this one is, so the assets over here, this is a resource the company owns, and the asset will provide a future service or benefit. And under the asset, there are cash, inventory, equipment, and account receivable. What are the account receivable? The money you will receive in the future, or note receivable, or the company advances, prepaid expenses. All these kind of are under the asset. Okay? Then what is the liability? This one, liability. Liability is claims against the asset. So this one over here, $50,000. This Bank of America, I owe money to $30,000 to Bank of America. They are going to claim against me, right? So this one is 30,000 is over here. It is claims against the asset. It is claims against the asset, right? 30,000. And we call creditor party to whom money is owed. And we are the debtor, and the bank is a creditor. Okay? We are debtor and the bank. So then under the liability, there are accounts payables and loans payable, unearned revenue, and interest payable, sales tax payable. Every payable, P-A-Y-A-B-L-E, payable, these are all the liability. So, and the equity. What is the equity there? Okay. Equity is ownership claim on total asset. When I purchase a BMW, the 20,000 is my money. Out of my money, 20,000. Okay. So this is 20,000 over here against 50,000. This is my money. Okay. This is money I borrowed from Bank of America. Okay. So this one is ownership claim on total asset. This one is referred to a residual equity. Residual equity means if asset, this is asset minus liability is what? It's equity, right? Well, because A equal L plus E means L means A minus equity, and E means A minus L. This is all algebraic formation. Okay, this is the same, right? That means that, and now out of 50,000, and you are going to deduct 30,000. This is a residual claim. This is a residual claim that is we call residual equity. Under this is a very important. Under the equity, there are only two things. One is share capital, and the other one is retained earning. Share capital is this. Share capital. What's your name? One? Suksawan. Suksawan purchased my company stocks. Then that is a share capital. That means I sold my stock to Suksawan. Okay, Suksawan, my stock sold to her, and she is going to be an owner of my company. And there is another equity is out of the retained earning. This retained earning is this share capital. There are, pretty soon you are going to have an example, okay? The retained earning is what the company operate, after operating, whatever they earned, that is retained earnings, okay? So retained earning is the company operate, and the company have a net income, right? Yes. Right? Company has a net income. This net income minus dividend. So what's the dividend means? Dividend is the payment to the owner, stockholders, okay, or shareholders. So this is retained earning, okay? This is retained earning. So under the equity, this is retained, okay. However, this one, then where's the revenue and the expenses? Where's that supposed to go? That's supposed to go to under the retained earnings, right? Okay. Okay, so over here, the increase of equity is revenue, because after selling this one to Soksawan, and you pay me keep.
Keep.
Yeah, 3,000 keep, right? To me. That 3,000 is my revenue. Okay? So this, and the expenses are, the direct expense is we call cost of goods sold. That means this is a 3,000 keep, right? And however, total cost, which is the expense I spend to make this one. So plastic, water, and there's a printed matter, or this kind of things we call this cost of goods sold. Okay? Direct cost to the product we call cost of goods sold. Cost of goods sold. So restaurant business. What's your name? Binenghan. Binenghan? Okay, Binenghan. Listen, you purchase the organic vegetables to make dishes, right? The food cost, what you paid, that is cost of goods sold. Okay? That's cost of goods sold, which is one of the expenses. Okay? Then you hire a waitress. Waitress is not related to making the dish. That the waitress wages are expensive. That is indirectly associated with the dishes, right? Okay. So this one is revenue. Is what's the revenue? Revenues result from business activities entered into for the purpose of earning income. Revenue. This is, I sold this one, the Sokso one, and I receive 3,000 kip. So this is a revenue, okay? And then over here, expenses. This expenses, the money I paid to purchase this, plastic and the printed matter and the water and all these expenses, plus all the wages I paid and the stamps I bought and the lunch I bought and all this kind of the expenses. So then generally result from selling merchandise and performing service, renting property, and lending money. Now you understand about this, right? So what increased equity is this? Revenue, and also after selling stocks to the stockholders, whatever money I received, that's supposed to go to the the equity. Okay, so increasing of the equity is this: investment by shareholder. This is a stock I sold, right? And the revenue. Then what makes decrease of the equity is expenses and dividends to shareholders. Dividends to shareholders means this. Do you think there is a free lunch nowadays? No free lunch, right? If you purchase my company stock, that means you made the investment your money into my company, then I have to pay some sort of return, your return. your return, that is dividend. Right? That's a dividend. So whenever I pay in the form of dividends to the owner or investors or shareholders, that we call dividend. So here is an equity over here. This equity is number one, after selling the stocks to the investors. That's one, and the other one is this equity increased by revenue, selling of this product to the customers. And then what the decrease of this equity is making payment in the form of dividend to the owner or shareholders or investors. That is dividend, or any expenses to purchase all the materials and purchase labors, electricity bills and everything. These are the expenses. Okay? So now, you know about this one, right? This equity increased by selling the stock and revenue and the dividend paid to shareholders and expenses. Now, expenses are, here's what I read this. 크게, the loud. Expenses are the cost of assets consumed or services used in the process of earning revenue. This is the definition of the expenses. Expenses are the cost of assets. Cost of asset consumed. Cost of asset consumed means what? They use cash. They use cash to buy this one, right? So this material over here, this printed material, right? So they consume the cost of asset or services used in the process of, the revenue or earning revenue. The common expenses are, read this, louder.
Common expenses are
Salary expenses, rent expense, interest expense, property tax expense, etc., etc., etc. There are hundreds of items or expenses, right? Okay. Now, we are going to talk about now. Okay, so now then dividends. Dividends. What's your name? Kansamo. Read this.
Dividends are the distribution of cash and other assets to the shareholder.
Dividends are the distribution of cash or other assets to who? Shareholders. And then reduce retained earning, reduce retained earning, and it is not an expenses. So dividend and expense are different. Different meaning, totally different meaning. Expenses out of the out of the business you did, but the dividends is just the company pay for the portion of some return for the investors. Okay. Now, okay. Well, classify the following item as issuance of shares, dividends, rent expense, classification. This is expense. You see expense. Effect on equity. Is that the increase equity or decrease equity? Equity. And the service revenue. Is it a revenue? Is it going to increase equity or decrease equity? Increase equity. And dividends? Dividends is dividends. It is not the expenses. Dividends is dividends. However, this one is under the equity sections, right? Okay, so this one and decrease. and the salary expense